You're correct. Collusion is probably one of the biggest challenges that the trade finance industry faces, both the banks and the non-banks. The non-banks are slightly more at risk of this, particularly in the supply chain finance area, because their clients are often several steps removed from the physical cargo.
Welcome to Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance. Hello und willkommen. I'm Deepesh Patel, editor at Treasury Payments, and we are back today in Vienna at ICC Austria's finest Trade Finance Week. I'm delighted to be joined by someone I actually bumped into on the plane on the way to Vienna, David Cuckney, Assistant Director of the International Maritime Bureau. And I'm sure for all of you listening, you'll understand why we had such a great plane journey, having lots of discussion around bills of lading, but in particular, spotting fraudulent actors, fraudulent documents, and fraudulent transactions. So David is Assistant Director at the International Maritime Bureau, or the IMB. David, welcome to Trade Finance Talks. Welcome to ICC Austria's Trade Finance Week, your first one.
Thank you. Pleasure to be here.
Can you tell me a little bit about yourself, a little bit about IMB, its objectives as an organization, and some of the services you provide to your customers?
Yeah, of course. So we are an affiliate of the International Chamber of Commerce, and we act sort of informally as their anti-crime or anti-fraud arm. In terms of our corporate structure, we're a private, not-for-profit company, so we don't have any shareholders to report to. We exist really for the sole purpose of assisting our members in compliance, due diligence, fraud prevention, and investigation. Typically, our membership are banks, insurance, and shipping companies, although we do operate for anyone who has a legitimate interest in international trade, shall we say.
Thank you. So one thing that caught my attention during our flight conversation was the fact that 3,000 to 5,000 bills of lading come across your desk, or at least your team's desk, each week. What does that actually mean? Does that mean a day in the life for you involves sifting through all of those?
Well, it's not just me, I'm happy to say. We do process every bill of lading that we're sent. It's what we're most known for, particularly within trade finance. The majority of our membership are the compliance or financial crime departments of international banks. And our remit really is to sort of confirm that documents they are presented, first of all, that the underlying shipments have taken place, the right cargoes are loaded on the right vessels in the right quantities, and are delivered to the rightful place. Also taking into account sanctions concerns and multiple financing concerns. Currently, the most important thing rests around the validity of the document itself. Traditionally, trade finance fraud involved issues with the physical cargo, whereas now it's really the fraud is in the documents. Are they issued by an authorized person? Do they truly represent title to the cargo? And can any stakeholder, rely on them for security or collateral?
Thank you. So let's talk a little bit about red flags that you see or you might watch out for when it comes to spotting a fraudulent bill of lading. What are they?
This is quite a tricky question to answer because there is no uniform standard for a bill of lading. They come in various different templates, various different styles. So it makes it very difficult to look at a document and go, actually, there's a problem with this. Certainly differing fonts, that's normally quite a big giveaway. Details tend to be put on at the same time, the same place, whereas you've got a party on a bit of lading who's entered on there in a completely different style, a different font. It's normally a good indicator that, someone has tampered with it. Similarly with stamps, signatures, container numbers as well. They're not random. They are created using a specific formula that can be checked and verified. But really, it sort of comes down to satisfying yourself that it's issued with the correct authority and accurately describes the shipment contained therein.
Thanks, David. So let's go into some more examples. And the recent market lend versus QBE ruling in Singapore exposed how vulnerable supply chain finance structures can be, particularly when non-bank financial institutions sitting several tiers away from the original trade, fall victim to fraud involving fake bills of lading. And given that credit insurance typically excludes fraud and MBFIs operate under lighter regulation than banks, how concerned should we about this growing grey area in trade finance? And what's this tell us about emerging risks in supply chain finance?
You're correct. Collusion is probably one of the biggest challenges that the trade finance industry faces, both the banks and the non-banks. The non-banks are slightly more at risk of this, particularly in the supply chain finance area, because their clients are often several steps removed from the physical cargo. Especially the new entrants to the market, their compliance departments may not be as well developed or as experienced as you have at the banks. And this makes them more vulnerable, if you like, to, say, collusion, but also this synthetic trade. The case you mentioned before, traders presenting themselves as being involved in the sale and purchase of various commodities, where in fact they have nothing to do with a genuine trade. They are engaging in what's known as sort of paper trading, where you just shuffle copies of documents, you present them to obtain finance, to obtain working capital. And the practice is as old as time, but COVID really brought it to the light because it caused a lot of defaults at the time. Obviously, claims were made against the trade credit insurance policies. And again, this is another area that we sort of involved in investigation because a lot of the inquiries that the trade credit insurance make come to the same conclusion. This is a synthetic trade. None of these parties had any role in their physical shipment and never had, title to the cargoes that would enable them to buy, sell, or take delivery of them. And you mentioned the cases going through court. This is who's going to end up paying. It depends on a lot of factors. What does a policy stipulate? Exactly what does it cover? Et cetera, et cetera. So it has to be taken on a case-by-case basis. If you can prove fraud, all bets are off. The challenge is proving fraud because legally it's quite a high bar because you have to prove intent behind it as well. But it does happen, and they are sort of fighting back against these claims because of the volume of them and the increase in the synthetic trade.
Thank you, and a really interesting space that we'll have to watch closely for development. Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it. Another example, STS or ship-to-ship transfers. Can you talk about what that is and what that involves?
Yeah, of course. This is, again, increasingly common because of the sanctions landscape, a very fluid sanctions landscape. And what we increasingly see is deceptive shipping practices. So the crew of a vessel will move it to certain places at certain times, turn the AIS, the ability to track the vessel on and off at certain places, to try and give anyone making cursory checks into its movement a comfort, a false positive that, yes, the ship was in the right place at the right time. But what we see more of is deceptive shipping practices where the traders and the ship owners are working together to load cargoes, sanctioned cargoes, or loading them at sanctioned ports, and then sailing to places offshore other countries, loitering there for a few hours to pick up an AIS reading, and then sailing off, siding up next to other vessels to sort of give the impression that an STS shipment, a ship-to-ship transfer, has taken place, where in fact none has. It's all for show. And it's all to give anyone looking into the shipment, physical side of it, a comfort that all is okay when it's not.
And the objective for the fraud is effectively to get financing off of this transaction, right?
Yeah, correct. So with the sanctions, it's essentially get the bank to process a transaction, facilitate the transaction, but it's hiding the true risk parameters of it. A lot of banks that will shy away from it just because it's outside of their risk appetite. But by shielding the fact that it's a Russian origin cargo, for example, is a way to try and get the bank to process the transaction without them becoming any the wiser.
Thank you very much. End-of-life fraud. That's another interesting type of fraud that we discussed earlier because it's hard for new companies to set up shop deliberately with the intention of fraudulently getting financed by the bank because it's unlikely the bank will even look at them because of the fact that they established their SPV or vehicle so early and they'll need that good track record. So what is end-of-life fraud and why is that something that we need to watch out for?
As you just described, that is a real concern. For a new company recently incorporated, you're not going to get big credit lines from banks. It's very difficult to establish a company for the sole purpose of committing fraud. What is a risk are companies we think of as well-established, long-standing, legitimate, But behind the scenes, there are concerns that they are actively hiding from their bankers, auditors, regulators, etc., whoever it may be. You look back on some of the biggest publicized defaults over the last 5, even 10 years, up until the moment they weren't, they were all thought of as a safe bet, fairly reputable run company, well established, big credit lines. And that's where the risk is with regards to if you're solely relying on company due diligence. For example, you're looking at their history as you know it, you're doing 6-monthly annual audits, and that is the limit of your compliance. You may miss things that, with the benefit of hindsight, you could have spotted with things like transactional due diligence. If you make the checks at the time the cargoes are supposedly loaded on the vessel, it gives you a much better chance to spot these irregularities. If you're reading about your client's problems for the first time on the front page of the Financial Times, it's probably too late for you to do much to protect yourself. Whereas if you find out there's a problem much earlier in the life cycle of the transaction, it gives you much better opportunity to get out in front of it.
Thank you. Finally, sanctions, dark fleet. We've talked about Russia recently and some of the sanctions implied and the increase in something like 600 to 1,200 vessels that operate under this so-called dark fleet. What is it?
The dark fleet, the exact size of it is largely unknown, estimates between about 600 and 1,200 vessels. But the important figure is 1,000 or just over 1,000, because that's the number of vessels currently subject to sanctions by the various powers that be. These are vessels with very opaque ownership, guilty of deceptive shipping practices. They're flagged by these newer flags to the market, many of whom haven't ratified a lot of IMO policies about health and safety and operations, etc. These are the ones employed, if you like, in the dark fleet to move sanctioned cargoes. Tracking them is quite difficult. They use a lot of deceptive shipping practices. AIS is often switched on and off at various times. It can be spoofed, it can be jammed. The vessel's position, I spoke earlier about, ship owners sailing to certain jurisdictions, anchoring there for a day and then sailing off just to give an AIS record that would satisfy a basic compliance check. So it's the growth of the dark fleet, the AIS spoofing that goes with it, and the collusion aspect.
Thank you. And final question, should we be optimistic or should we be cautious about the prospects of electronic bills of lading? There's a lot of talk about the digitalization of bills of lading. What's your opinion on whether they can combat fraud?
Digitalization is a fantastic opportunity. Trade finance is very document heavy and it's long overdue a digital transformation. And the potential to increase efficiencies, speed up transaction times, reduce processing times, etc., are fantastic. But the concern I still do have is with the fraud angle, because when you hear people talk about digitalization, electronic bills of lading, often you hear, everything's going to be electronic, so there'll be no more fraud. And that's not entirely true, or it's not true at all, because any form of bill of lading, whether it's paper or electronic, doesn't guard against collusion, which is a primary problem. If a document sits on an immutable ledger or on the blockchain, if it's fraudulent when it's digitized or the information on it is incorrect when it's first issued, it doesn't matter if it sits on an immutable ledger because it's still incorrect. Going back to the collusion angle, a lot of big trading houses have their own shipping subsidiaries who issue bills of lading on behalf of the parent. Now, that in itself is no problem. A lot of the big traders have it, economies of scale, operational efficiencies, etc. But there is still a conflict. The issue of the bill of lading is directly related to what is likely the beneficiary of the transaction. So even with an electronic bill of lading, you can't guard against this collusion, because how do you get invited onto the platform? Again, talking about these big commodity frauds of the last few years. Up until they weren't, these people were highly regarded, well established. I don't think they'd have had any problem accessing any variety of e-solutions or digital platforms for trade finance. Because they don't guard against collusion, you can never remove the fraud risk from it. So great potential, but still exercise caution.
David, it's been such a pleasure hearing about your thoughts on behalf of the International Maritime Bureau. If you want to find out more, do keep an eye out for ICC Austria's Trade Finance Week as the audience goes through so many more examples, case studies, and much more detail on all of these kinds of transactions and what to watch out for. I'm Deepesh Patel, editor at Treasury Payments. David, thank you. It's been such a pleasure.
Not at all. Thank you.
And don't forget to follow Treasury Payments
on your favorite podcast platform.
Thanks for listening.